Hey guys, Jonathan Rose here, and let's talk about how to analyze the market right now because today, market got annihilated. Monday, Dow was up 500 points. So what changed? Well, yesterday, we had our Monday member-only class. We do that every Monday. It was at that class where we talked about the easiest futures trade there is, which is fading the move. Fading the moves means going counter to what the market is doing. So as the market was rallying, we were talking about this needs to sell off. All my skeptics out there, right up here, I'll leave 2 clips of that class so you can see the reasoning behind that. But here's why. The market gapped up thinking that there was an agreement on tariffs, thinking that by kicking the can down the road, it was somewhat bullish activity. It wasn't. It's just nonsense. It's just noise. Nothing happened at all. The only thing that happened in discussions with US and China regarding tariffs is the US is not going to levy the additional 25% tariffs starting in January, and the Chinese are agreeing to possibly buy more agricultural products from the US. The market took that as incredibly bullish, but it wasn't. The market's not always right. The market was dead wrong. You know what is right? The Fed. The Fed is changing policy because of a weakening economy. This is the silliest quote ever. U.S. Treasury Munchin says financial markets are trying to figure out if the U.S. and China will have a trade deal after 90 days. So the market's swinging 1,000 points, up 500, down 500, just trying to figure it out. Nothing's happening. There's no trade deal. You want to know what's going on with the economy? The yield curve is dangerously close to inverting. The yield curve's inverted something like 9 times historically, and every single time, within 18 months, it's been followed by a recession. Let me take you to Treasury.gov. I'll leave this link in the description in the YouTube channel or in the YouTube videos, whatever. Here's the problem. January 2018, I don't know how to put this on a monthly. The data's horrible, but hopefully you'll get the idea. The 10-year was trading 2.46%. The 2-year was trading 1.92%. So if you just do 2.46 minus 1.92, the 2s, 10s spread is trading at 0.54, almost a half a basis point. Okay? So if you go throughout the year, when the market was getting hit, the yield curve was getting flatter and flatter and flatter, closer and closer together. And look at that through 2s, 10s. That's what everybody's watching. Now, when rates started to go higher, the yield curve started to steepen a little bit. The difference got wider and wider and wider. But now what's happening is we are getting super, super flat. 2.98, 2.83, 0.15 difference, even closer today. So the yield curve is getting dangerously close to going inverted. That's the reason we are selling off. There is no trade deal. This is what we were talking about in our class, that it's like a free call that Trump is using, like an out-of-the-money call, meaning he can always support the market. But the Fed's changed its stance. When the Fed changed their stance, the market rallied, right? Trump wants to support the market. It's his legacy. The stock market opened at what? 2690 going back to the beginning of the year. So he needs it above 2690 at the end of the year. So it looks like it was positive for the stock market. The last thing he wants is to get it under this main level. Well, Fed got involved. We rallied. Tariffs, they couldn't pass anything, but they try to sell it as being positive. The market's taking hold. There's trouble ahead. Follow the bonds, follow the yield curve. The yield curve is dangerously close to inverted. If it continues going this way, this market is going to get annihilated. Be very careful. We have strong resistance at 2764. Let me expand. This is on a daily, just 100, 200 period moving averages. Look how consistent these have been. These have told us what's going on. 200 period gapping above, gets up to the 100. Support, this turns into resistance. Resistance, gaps above, it's not going over this, gets right back down. 2764 is major support, and the market today didn't even sniff at that level. Got right back down to it. Look what happened as soon as it hit it. Free falling, like our friend Tom Petty says. Okay, major level. This will be resistance going forward. Follow the yield curve. The market's heavy. There's no reason to rally right now unless all of a sudden out of nowhere Trump comes and says, you know what? Everything is fine. We work things out with China. He needs to do that to support the market. That's our only chance right now. Thanks, Jonathan, Active Day Trader.